and welcome to ET Markets Crypto TV presented by CoinSwitch Kuber. Our focus has been to demystify crypto and its universe, to simplify concepts and break down the many aspects of crypto so that you and I can learn together. The adoption, the interest in crypto across the world is growing, and with it are growing calls to regulate it. And there are valid questions. Do we have systems and processes in place that safeguard investors and users? Are users, who are mostly young, aware of the full spectrum of risks with investing in a volatile product like crypto? What about attempts to curb or leash misleading advertisements promising phenomenal returns? As we begin 2022, these topics are likely to dominate. So let's try and understand it from the other side. I'm Maloni Bhatt, and I'm pleased to welcome Pareen Lathia, who is the co-founder of Buidlers, which is an incubator for crypto startups. He was also the Assistant Vice President of Marketing at WazirX. He is a writer and a yoga instructor. Pareen, welcome to Crypto TV.
Thank you for having me here, Maloni.
Pareen, crypto platforms say that they've been very lucky in getting users onto their platforms in a very short time, and the numbers are growing. So what role do you think marketing plays in crypto beyond user acquisition?
I think user acquisition is the end result. The main part that marketing plays here is to create awareness, because as we all know, crypto is a high risk asset class, and whenever something new appears on the market where investors do not really understand the technology that goes behind this, it is incredibly difficult to make them understand how they should invest, what parameters they should judge a particular cryptocurrency on, and also just what amount of risk appetite they should have while going into this new asset class. And I think marketing from every angle is mostly about spreading awareness and disseminating the right information, making sure investors take the right decisions instead of just going all out and trying to make a killing in the market, which is generally how crypto is perceived. And that's so not true. A balanced approach is needed. And I think everyone in the industry has been trying to educate the users before acquiring them, instead of first acquiring the users and then giving them education.
Pareen, if you see, in the real world, that's not how it's happened, isn't it? I mean, there's been a fantastic adoption of crypto, and people have, in fact, been attracted to it because it is, as you put, an asset class that can give you some kind of phenomenal returns. I mean, that is one of the big attractive propositions for crypto for younger people, wouldn't you say?
I think the more mature voices in the industry, for example, Paul Tudor Jones from Wall Street, who's known to be one of the most savvy investors of our time, he went out and categorically said that a retail trader should only invest 1% to 5% of their portfolio in crypto. And he did not even say crypto, he said Bitcoin only, because Bitcoin is probably the most proven asset out of everything that we see in the crypto market today. But more mature analysts or more mature advisors always tell people to stay wary, because the market is super volatile. And this volatility we've seen in 2018 and 19, it can cause people to lose their houses. It can cause people to lose literally 90% of their portfolio, right? And as you go from equities to Bitcoin, it gets riskier by an order of magnitude. When you go from Bitcoin to any other smaller coin, it gets as much risky, right? So these are some of the voices that people should listen to, instead of every YouTuber out there who's telling you how to double your money. Those voices are encouraging speculation instead of fundamentally planning your investment. Instead, you may end up losing a lot of money, and that's not something that a retail trader wants to do.
This point where you're saying that they really need to look at their investment, look at what they're investing, learn to evaluate coins and stuff like that. But as youngsters, they make this plunge into crypto investments because they think it's quick return without actual hard work.
Yeah.
Can you give us more in terms of what is the advice that they should be following? What are the points that they should be keeping in mind?
I think first is we see a lot of influx of young people, most of whom have never even invested in any other asset. These are early 20-year-old investors. They're not even technically investors because they don't have a portfolio plan out there, right? But the good thing, while I talk to all of these investors, is that their risk appetite is quite high. They want more returns because early in the life they can take that risk and they are okay. But as long as they are investing money that they can afford to lose, if they are taking a loan out, or if they are putting a significant amount of their income or savings in this, that's a recipe for disaster. When the bear market sets in, this is going to go for a toss. That's very clear, and no one can predict the market cycles, right? So we are going to look at a bear market. That's the background context. In terms of just picking a coin, there are some key factors that we look at, right? In a stock, when I'm investing, I would go and study their balance sheet. I would look at their price earnings. I would look at what the analysts have to say about their charts, which is technical analysis. Generally, in crypto, there is no balance sheet. Like, there is no balance sheet for Bitcoin. There is no balance sheet for Ethereum. So what you do is first you study their white paper. That's equivalent to balance sheet here. You need to understand what is the use case that they are addressing. Why is Ethereum worth $250 billion today? What is causing it to go so high is because their vision is grand. Second thing, to support the vision, is do you have the founder who has the capabilities to deliver something like that? Many people end up investing in meme coins or coins that they do not know which team is backing. So somewhere in the world, two people launch a coin. By the way, it just takes 6 lines of code to launch a coin today. You could launch Meloni coin and it's done in 5 minutes. It's as easy as that. You cannot do that with equities. You cannot do that with a listed company, right? So it's fairly regulated there. Now, when someone looks at this, it's very important to know who the founders are and what capabilities do they have. Do they have the educational background, the tech background to actually deliver on this? Now, look at Ethereum. Of course, Vitalik, we know that he's done enough work in the industry. We know that every expert in the world respects him. He understands cryptography, maths, economics, and technology side of it. So there is fair amount of substantiation to their vision, because the vision can be grand. But now, does the founder really have the capability to deliver this? And can you see enough material from the founder on, let's say, their blog, on the company blog, or on YouTube? Can you know who is this founder? Yes, then it makes a lot of sense. Third, and the most important thing that people miss out, is the total token supply and the market cap. Right? One thing that separates crypto from every other asset is that the supply is usually capped. So when people say, XRP, which is Ripple, is going to go to $589. This was a narrative that was floated by some Twitter influencers, saying Ripple, which is less than $1 today, is going to go to $589. At $589, considering their supply, the market cap would be in trillions of dollars. That's not going to happen. That's never going to happen. So if you look at the maximum supply and how these tokens are divided, these are there in the white paper. These are there on every coin's website. This is fundamental analysis in crypto. Not many people understand this. Not many people do this. And that increases their risk. But if you were to check that out and say, okay, this coin is already valued at $100 million. What are their competitors valued at? This is a very sane way of going about evaluating a cryptocurrency. These days, every cryptocurrency has at least 3 to 5 competitors. So you look at them, you benchmark and say, okay, I'm investing in a metaverse project. But what are 4 other metaverse projects valued at? Why is this undervalued or overvalued? And this becomes a very sane way of going about investing. The fourth thing here is to, of course, go and check out their tech releases. And technical releases, most of these projects are open source. If you go to their website, there will be a GitHub profile that they have. Their code, for example, Ethereum's code or Decentraland code, all of these codes are open source. I can go and I can see if there is any update here or not. Many of the projects that I see right now, they haven't been updated for 2 years. Just simple. If there is no progress on the technology side, then this is not a sound investment. That's like saying, I am investing in a company, but their factory is completely shut down. Would you invest in a company where the factory is just not operating? You wouldn't, right? So why invest in a project where there is no technology being developed? These are most important ones when it comes to investing in crypto. And I think this de-risks it by quite a bit. Some red flags here, and you just don't go and invest in that project.
Pareen, I think these are very, very important points. And I'm sure that, a lot of people who are investing in crypto maybe skim through them, don't even go through them. But I think, very important. And, I hope people pick on this and are able to sort of, strengthen their investments after what you said. So I want to talk about this ICC World Cup, and at that time we saw what is being referred to as the crypto ad blitz in India. Apparently, exchanges have spent about 40 crore in advertising during that time. And major exchanges after that, after a backlash, they decided to take a step back from creating new ads until the rules came into place. So what have been the learnings from this? And for you, from a marketing perspective, because you've been a marketer in the past, do you think that the ecosystem has, especially in India, has learned and are likely to be more wary?
I think it's important for the industry to go out and talk to people, for sure. Some ads that I saw went overboard and promised some returns and promised some risk-free returns, which is not true. Creating false perception is not what we are looking at. But at the same time, India does not want to be left out of this revolution. That's like saying, I will not get into internet in early 90s, which we did not, right? We were late for the internet revolution. We were late for the telecom revolution. This has hurt India and our chances. Silicon Valley could have been in Bangalore, right? And this is not only about traders and investors. This is about people who are actually building these projects. They get legitimacy when their peers, their parents, everyone in their community sees this as a legitimate career choice. Engineers, today blockchain engineers are one of the highest paid engineers in the world, right? India does not want to miss out on this. So I see this as a great initiative when you go out on a large platform and support this. Similarly, on a global scale, just to give you some context, FTX did this with F1 racing. They bought out entire Formula One. They did this on a large scale with football clubs. They bought out a lot of advertising inventory from football clubs. NBA has seen some of the crypto projects advertised there. This only pushes the bar forward as long as we are not pretending that this is a risk-free return. Of course, all the disclaimers have to go with it, that this is a risky asset, but don't miss out on this.
Would you say then that the industry hurt itself in some ways by going all out as it did in India?
I think it's a matter of push and pull here. There is no boundary set. The technology is so new. The asset also includes. This is the first time that a tech asset includes economics built into it. You can buy a computer, you can buy an iPhone, but that's an asset, separate from its price, separate from its value. Everything is separate. This is the first time we are seeing something like this. So of course, there is no boundary set anywhere. You don't know where to go. There are projects that are giving 100% yields in crypto, which is insane to think about. That's true. A retail trader might end up losing money here. So there is a large chasm to be crossed here. There is no way to know where this ends and where that starts. Only way to go out and experiment works for most countries. So sometimes we go overboard, but then the industry, the community reminds, saying, okay, this is too much. You don't want to do this at this stage. Go ahead and advertise it with all the disclaimers that you have. And I think now with the ICC, after the ICC World Cup, every player has been putting disclaimers. Also, I think there have been enough statements from everyone in the fintech industry. Also, YouTubers are now putting disclaimers. Instagram influencers are now putting fair disclaimers, which is what happened with mutual funds as well. Just look at mutual funds 15, 20 years ago, and this is what happened. People started buying it, and then, as Kai said, that you need this disclaimer. So that works really well, I think.
Now you feel that these risks are being conveyed properly, and most people who invest in crypto are aware of it.
I would say at least in metro cities, tier 1 cities, I've seen people be aware of these risks. They have access to analysts, they have access to investment managers who make them understand of the risks. Mostly really young population from smaller towns is where they are going all out and expecting to double their money or 10x their money. That's still a risky area. But with enough good influencers out there, enough good journalists educating them, this scenario is slowly changing. So there is no way to say this is where the line is. Only way to see where the line is to either get really close to it or just be left out of the entire revolution. So it's worth experimenting, and course correction very easily is possible in this industry because industry is very responsive. So it doesn't take years for them to realize that, okay, this is wrong. It takes weeks and they correct. So that's what I love about crypto, that it's very fast and people take steps very quickly. So YouTubers have started with this. And I think the duration is substantial as well. The disclaimers are clear as well. And many of them are already telling investors that this is highly risky. Every video, every tweet, that this is a risky affair here.
Now, what would you say to critics, Pareen, who say that crypto is backed by nothing? I mean, it's a big load of nothing, actually.
Yeah, that's true. It's not wrong. Crypto is only backed by math, and something like gold is only backed by its chemical properties. Gold is not backed by anything. Gold is gold because there are certain chemical properties that you just cannot replicate. People have tried for centuries now, but these chemical properties is what makes it unique and what makes it scarce. Most of these people do not know the history of money. There is this phenomenal book called The Bitcoin Standard. And there is this book by Professor Neil Ferguson called The Ascent of Money. If you read these two books, you will see that any kind of value today, we look at money in a very narrow spectrum. Today, if I want to sell my iPhone and get 10 cups of chai, I can get it. So how is that not money? It is money. Everything is money today, right? We just don't look at it that way. What blockchain or crypto has done is just put this money as math and help people transfer it over the internet. That's the revolution that we are talking about. That math is pretty solid. If you look at Bitcoin's white paper, if you look at its math, it's really, really solid math. And that is why so many people believe in it. Of course, most of the things that we say have value are perception driven. Right? Why does a BMW have a value, have an X value, or why does a Maruti have a Y value? It's utility, but it's also perception. And here the perception part is large. Utility part has not kicked in as of now. But that doesn't mean 5 years later, the utility part won't be kicked in, right? When it comes, that would be something that we are all betting on today.
I want you to, wear a marketer hat again. Crypto is a digital asset with a global availability, right? So for a crypto marketer, which is the best way, do you think, to reach the Indian consumer? What works?
I think there are enough thought leaders in the crypto sector right now There are publications that are doing phenomenal work educating people, and that's the best way to reach out. Advertising in cricket matches, putting up hoardings, doing radio spots is one side of it. But a person doesn't buy something as complex as crypto just because they saw an ad. As a marketer, I look at everything as a funnel, right? First, if my friend first heard about Bitcoin today, uh, they are not going to buy Bitcoin right there. They need to go through a process of decision making. They need to eliminate a certain amount of doubts to be able to download the app, make that first purchase. That entire journey is where generally thought leaders end up guiding people. And that works out really well because you do not even want to go and say, okay, just buy it because you are going to double your money. Thought leaders usually end up telling them, hey, read this, read that, watch this video, come back, do some background understanding first, build some conviction first. If you build conviction, even in the bear market, you have the capacity to hold. You do not panic sell it at every bad news that you can think of on Twitter tomorrow. And that's the way to go about it. The IPL part or the cricket match part or any radio TV spots that you see today is to arouse curiosity. That is just the top part of the funnel. If we were to look at the funnel, if I arouse curiosity for 100 people, out of those 100 people, 10 will go and do their research. 10 will invest for speculative value. They will most likely lose money. But those 10 who actually go and read these books, who watch videos from authorities, okay, not random videos, but if Paul Tudor Jones is saying something, or if Ray Dalio is saying something, if Elon Musk is saying something, then you listen because these people, they're putting their credibility online. Tomorrow, if this turns out to be a scam, their credibility is gone, and that's worth hundreds of billions of dollars. So you can be reasonably sure that they are doing the research before saying anything. And Ray Dalio has openly supported Bitcoin, Paul Tudor Jones, and I think every hedge fund on Wall Street today has Bitcoin on their books, right? From BlackRock to JP Morgan, everyone has bought Bitcoin. It's on their books. You can check their audit reports, and if they are buying it, something's happening. Then you do your research, build that conviction, then go ahead and buy Bitcoin. When you do that, you have the capacity to hold it, even if there is a bear market that sets in, because long term, this is a sound investment and nothing gets you into the panic mode. Most people end up selling in panic mode.
Pareen, I noticed that when you named all of these top hedge fund managers, investors, you said Bitcoin and not crypto. So is this intentional?
Yes. Generally, when my friends or family call me, message me and say, hey, I want to buy crypto, I tell them, if you don't understand anything, just stick with Bitcoin, because it is an order of magnitude more risky to get into anything. And they will be like, oh, even Ethereum. Yes, even Ethereum. Bitcoin is the only technology that has been sustainably proven for last 11 years. It's not a small feat here. That all of these people, when you look at Elon Musk talking, he will not say crypto. He will only say Bitcoin. When you see Jack Dorsey, he will only say Bitcoin, not crypto, right? So there is a reason behind this. All the other technologies are great. It's not that I don't invest in them. I invest in them. I fund projects on Ethereum, right? All of that is okay. But for a retail trader to get into that is way more risky if you don't understand. So start with Bitcoin, learn about that. That's the genesis of the entire industry anyway. And then graduate to learning about Ethereum, then graduate to learning about, let's say, Decentraland, Polygon. All of these technologies are incredibly complex and they're evolving every month. Every month, today, Polygon released something called Plonky S, which is their new ZK rollups technology. Now, I don't even understand. I'll have to read for at least 10 hours to understand what they are doing, right? And a retail trader or an investor doesn't have the time to do this. So how do you go about checking super new technologies? Like If someone was inventing electricity today, most likely you would get a shock. Unless it's tested by 10,000 people, then you can safely plug it in and use it as a retail consumer, right? You don't want to use something that's half-baked. Same thing applies for investment as well. Many of these projects will become billion-dollar projects, and out of India, we are seeing a lot of projects out of India becoming a billion-dollar projects. But that's when they are ready for the retail investors. They've proven, the investors have checked them, the tech guys have checked them. Everyone knows that there are no obvious red flags here. Then you launch it on a large exchange, and then retail is it's safer for retail to buy.
As someone who is the co-founder of Buidlers Tribe, which is an incubator for crypto startups, what's the potential that you see, especially in India, and say, if you can give us a time frame, say the next 2 years?
This year, I think we are going to see 10 more unicorns from India, for sure.
In the crypto space?
Yes, definitely. Easily 10 more unicorns that we are seeing right now. Projects that we work with, some of them haven't even launched their tokens, and their valuation is in hundreds of millions of dollars. One project, for example, that launched recently, Biconomy, their market cap went up to $20 billion. It's a phenomenal feat. The team has been working for 3 years, Indian team, and they've built something that will be used by global giants, right? So this is the finance part of it. Definitely this year we are going to see 10 unicorns, no doubt about that. And that number is just going to increase every year. From a larger context perspective, this is the first time that Indian products are being used globally. Polygon is being used globally. Polygon is slated to be number 3 on CoinMarketCap now. That's their aim that the founder has set out to achieve, which means many of the Valley developers today are already building on Polygon. This never happened in Web2. You saw the Amazon coming to India, but you never saw Flipkart going out of India. You never saw Zomato taking off in, let's say, US. You never saw Swiggy taking off there, right? All of these, they had to hard defend themselves even in India. This is the first time when builders from India come out and they say, okay, my product, for example, Biconomy, will be used by everyone. We are working with a team out of India that has practically built a Zoom on blockchain. So it's a decentralized video conferencing solution that they built. You can use the product works really well, and they are going to be used by the entire world in the next few years. And that will always have the stamp saying built in India, right? This should tell us that we are ready to conquer the world. Now we are not a market where Microsofts of the world and Googles of the world come and sell their products to us. We are the producers. They will buy our products now. And that's a phenomenal feat, if you ask me.
I'm curious to know that, what makes India so well placed to be at the forefront of the cutting edge of this kind of technology?
I would say hunger. Apart from anything else, early 20-year-old developers in India, they are just hungry for a piece of this massive pie that's out there. We've been denied access. There used to be an India discount, when it comes to venture capital. Just because you are out of India, you get certain amount of discount on your valuation because you are not from Valley, and all of these practices existed. It was very hard, unless you go to a Y Combinator or something like that, very hard for an Indian founder to raise from Valley VCs. It was very hard to sell it there. No one even dared think of this. Probably Zoho and a few examples, Freshworks are the ones that ended up doing that. But that's rare. That's really rare. Today, I think this is some kind of a second coming where we know this game very well now. There are enough VCs out of India, native VCs out of India, and there are enough native builders out of India. This connection is what we see flourishing, and I think there is sort of a premium on India. We talk to a lot of VCs from Valley, and they say, hey, we want access to Indian developers. I said, okay, not so fast, not so cheap. Today, with remote work as well, these developers are getting paid $100,000, $200,000 a year, easy. You don't need to go apply for a visa, wait for your job from Google, and then you get paid after 3 years. That's not true. You can be sitting out of Kanpur today, you can be sitting out of Goa, you can be sitting out of Lucknow, and you can still get paid as much as a programmer in Valley gets paid. That's what internet has enabled, and that's what probably pandemic has a slight hand to play as well.
How do you see regulation? And this is my last question to you, Pareen. How do you see regulations impacting all of this?
I think regulation is needed. There is no question about that. It's important to make sure that people who are taking shortcuts, people who are scamming people, people who are defrauding people are kept at bay. Also, as India, we want this to flourish. And the way to flourish is to give it a little bit of structure and reduce the madness part of it, encourage the right people and discourage the wrong people. That's what regulation at the core is, right? But it is also an iterative process. Regulation is not a one-step thing. It cannot be achieved in one step, right? What happens is industry has certain expectations, government has certain expectations. They meet somewhere in the middle, but it's an evolutionary iterative process. I'm really happy that industry is already talking to the government stakeholders, and I think these talks have been really productive. The bill has been taking into account how cryptos work, how they are mined, how they are brought, and how they are launched. I think in a couple of years, India should be ready with regulation, a framework that enables startups to thrive. So regulation is not only from the trading side, because trading regulation is fairly simple these days. Japan has done it, US has done it, a lot of people have done it. So we know what goes into that. But what about the regulation for developers, for companies that are building out of India? That's one bottleneck right now. But I think the way this dialogue has been going is just super encouraging, right from the RBI ban till Supreme Court announcement till today from 2020. It's just a great change that we see. And when talking to stakeholders, we see that they're trying to understand it more than trying to ban. No one's using the word ban anymore, which is a great positive sign in itself, right? So it's a process, probably takes 1 year, probably takes 2 years. The moment we understand that this is where the world is going to move, like what I keep telling people is we are moving towards a tokenized world. Your car is going to be a token on your wallet someday. Your house is going to be a token on your wallet someday. These technologies are here. It's banning them. It's like banning internet. You just can't do it. And if you do it, you regress, right? So accept it, and also make sure that India has producers, not just consumers. We don't want Valley projects to come and sell their tokens in India. We want Indians to sell their tokens to Valley investors, right? And that is where money comes into India and not goes outside.
Right. It's make in India and build in India, for Web 3.0. Pareen Lathia, co-founder of Buidlers Tribe. What a fascinating conversation. Thank you so much for your time today.
Thank you. It was great talking to you.